So let's look at the biggest movers in the S&P 500 over the past month, and are they worth buying into 2024? Let's have a look at the data, shall we? Well, Expedia is one of those large movers, and if I really had to project forward and you put a gun to my head over the next 12 months, what might happen? I might actually say, yeah, 53% return if it goes back to the highs it's had in previous years seems possible. Do I have anything more than the price charts though? And I've got 9 more charts to go through with you. Well, we do have the monthly momentum. That's the MACD. I use it in the way textbooks usually don't. We also have what the analysts think. I don't really care for that. We've got some seasonality support as well. January to July tends to be pretty strong for the stock. So we do have quite a bit to give us some support, and we can actually put a stop loss down here and look at that upside projection. Is it one which I would say can make those kinds of returns? Well, if again you put a gun to my head, yes, but I've not gone through all the fundamentals of value, growth, income. So the full due diligence hasn't been done, and that's critical to remember. Let's go on to the next one. What happens with this one? Again, remember, these are S&P 500 companies which have risen the most in the past month. Let's just have a quick look if they've got what it takes. Well, unfortunately, the momentum in this, despite having had this rise up, I fear hasn't sufficiently turned around enough. I wanted to see it more get to that stage, so I think we'll wait till January to make a decision, even though there's a hell of a lot of buys. Those of you who are a bit more risk loving and want to get in sooner into it, that's entirely up to you, but I'd rather be waiting for this one. Generac did great for us during the COVID period. You can see that. And then, of course, it did this, which is very important. It's not a bad company. It's just that it's not about the money you make. It's the money you keep. And that's why it was important to get out of this. And we do have that trailing stop loss on our investments that we make. Now, what about getting higher? Well, I really want to see the monthly MACD move above its own signal line. In other words, I want to see this blue dotted line move above the yellow, because on a pattern recognition basis, it tends to suggest you've got more odds of a good move up. And there is certainly a lot more upside. You can see what the analysts say. Now, again, I've not looked at the fundamentals for this at the moment. Value, growth, income, cash flow. And if you're on my approved filtered list, you're on my Great Investments program, you can look at those yourself anyway. So as things stand, with no more information, I'd still be waiting on this one as well. Monolithic Power. Well, it's one we'd picked earlier in the year, and it had given us our 40% return, but now it's had this massive rally again this year, and it's one I'll give a yes to as things stand, not only because all of these analysts are saying buy and seasonality wise looks good, but I think there's still some legs in that monthly MACD as well. So again, if you're on my Great Investments program, you look at the approved filtered list and you see that it ticks all the value, growth, income, cash flow boxes, then you've certainly got the green light on that one. What about Gartner? Again, another one which has shot up. Well, I'm somewhat worried it's overbought, and what tends to happen is you get these sharp rallies. In fact, you might have it for ages, and then nothing for a while when it's overbought. Look at that pattern, coincides with this before a drop. So I'm afraid not one for me, certainly given how good the other ones are. What about Carnival? Let's all go party like crazy. Well, that direction is upwards. So I'm going to say, oh, look, there's a mixed bag there. I'm going to say 60% yes, 40% no, okay? And you know my old saying, if in doubt, leave it out. So we're not going to do that one. Before I give you Equifax, just remember, we want to look at not just the charts and what the analysts think. More importantly is value, growth, income, cash flow. And you do that from my approved filtered list, please, folks. Okay, so let's have a look at this one. Equifax, as I said, it's just not strong enough to go up there, and I'd probably wait for it to break through this and then say it's going to go up there. So yes, but wait. Similarly with Paramount Global, gotta wait. It's been flatlining for too long. The overall trend is still down. It could easily rise and then drop. So I'm actually going to give that a no. DaVita. Kidney dialysis machines, I think. But don't hold me to that, I think, if memory serves. And it was, again, one that we'd picked earlier in this year. It was one of the start of the year ones and has given us our 40% return as of this week. Thanks, because that rise there, that's what generated it. Now, well, I would say, yeah, there's a long way to go and we'd be projecting forward. So that would also be yes, but subject to you looking at, I know, the approved filtered list and making sure it ticks the value, growth, income, cash flow. Otherwise, no. With all of these, no, if it's not on there. General digital, Gen Dig, no. Too messy, too ugly. I don't like ugly. Have a look at alpeshpatel.com/links to learn more about what we're talking about and improve your pension returns. Remember, the NASDAQ was up 46% this year. If your pension didn't keep up with that kind of market rise, sack your IFA. Ask yourself, why is your pension not even keeping up with the market? We're not talking about beating the market. We're just talking about keeping up with it. Okay? Thank you.